Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on right now? Well, we got a new president, right? And we're getting a little bit of a Trump bump, right? The optimism in the stock market going up higher. They're going to push it higher, right? You see, what we have right now is what's known as the dark period for stock buybacks. So stock buybacks cannot happen at the time of the earnings of the company, but this opens up January 24th and they can start buying their stocks back. This will push the markets up higher. We're going to grind higher. 6,200, 6,300 on the S&Ps where I'm looking. And then we're looking at the downturn, right? This Trump bump, this optimism, it's going to be short-lived. It's kind of sad, right? Not Trump's fault. It's just that the economy is going into a recession. Now, he probably cannot change the course of that recession. All the signals are there, and we're already in one, but they'll figure that out later down the road. But the official recession's coming, and that's going to bring the markets back in. Now, there's some buys right now. If you're out there shopping, you might look at Apple stock. Apple's come down to its 200-day moving average, down around 220, and over the next couple weeks, we're probably going to see it get pushed higher along with the market. Like I say, I think we got another 200, maybe 300 S&P points to push this market higher, and we'll see how that plays out. But what else is interesting? Well, we got the Trump coin. The Trump coin came out. You gone out and bought your Trump coin? That's a meme coin, right? Started by Donald Trump. Already first day reached a market cap $6 billion on the first day, right? I mean, that's like triple what fart coin's worth, right? The Trump coin is like 3 fart coins. I mean, it's incredible, right? There's so much money floating around out there that you just push these things higher. Now, I thought that the Donald was going to be the Bitcoin president, but maybe he wants his own coin. I don't know. Maybe he wants his own coin, but he did start a task force, the crypto task force, right? Got another task force in the government, which it's not like the government's shrinking. It's still like it's expanding. Now, last time Trump was in office, did he spend a lot of money? Yes, he spent a lot of money. Why did he spend the money? Wanted to make his friends rich, right? The rich get richer. And we're going to talk about that a little bit today. What we got in this country, we're turning into an oligarchy, if you would. A few people have a lot of power, just a few people. And these people will become the first trillionaires. There'll be people like Jeff Bezos with Amazon, Elon Musk, he's got Tesla, Zuckerberg's got Meta, and Apple was the first, I think it was the first $1 trillion company, right? And that was about 10 years ago. It took 50 years to get Apple to $1 trillion. But guess what? In the next 10 years, it got not to 2 trillion, but to 3 trillion. You see, what happens? How did this happen? Well, if you print enough money, you could get Apple to 6 trillion, 10 trillion, 20 trillion. You just got to keep printing money, right? So these people that are at the top of the food chain, they're going to become the first trillionaires. But now, when they become the first trillionaires, it's at the expense of the middle class and the poorer people, right? I mean, because the middle class and the poor, they don't have all the assets. It's not like these people are working harder. It's just that the assets they own keep going up and up and up. The more money we print, the richer we can make them, right? And the more money we print, your dollars go down in purchasing power. So you're losing money when you're working paycheck to paycheck. If you don't have a lot of assets to go up, right? If you don't have a lot of, let's call it gold, let's call it the stock market. If you don't have assets that are inflating, if you're just working paycheck to paycheck, well, you're getting poorer and poorer. You see, our country has never been more divided. The rich, they have more money than they know what to do with. We're going to have trillionaires out there now. When I was a kid, a millionaire, you really were shocked if you got to meet a millionaire. Now just walk next door and shake your neighbor's hand. He's probably a millionaire if he owns his home. That's just my take, right? Maybe he's not. Maybe he's in debt up to his eyeballs and has no net worth. But a lot of people are millionaires. It's not uncommon to be a millionaire. I never thought I'd be a millionaire, but I am a millionaire because I own my house, So I became a millionaire. Now, will I become a billionaire? If they keep printing enough money, every house out there could become $1 billion, right? But so these rich people, a lot of people don't like them, and it's for good reason, right? Because they're getting rich off the backs of the poor people, right? We keep printing the fake stuff, and the money keeps going down and down and down. Now, they'll tell you inflation is at 3%. Inflation, what it is stealing your money. That's what it is. Now, it's funny. It's funny. This cracks me up, right? Okay, the government has changed the definition of inflation. You used to pull out a dictionary. If you have an old dictionary, you can pull it out and look up the word inflation, and it will say the printing of money, increasing the money supply. This would be the definition of inflation. You buy a dictionary today in the bookstore, go to a bookstore, open up and look at the word inflation. Inflation is the increase in prices. No longer has anything to do with printing money. No longer has anything to do with the money supply. Why does the government want to shift the definition? Well, they don't want to be blamed for the inflation. And believe me, inflation is far from dead. They're telling you it's running around 3%. It's still up at 8 to 10% for everything that you and me buy. Now, granted, I'm sure there's some things that have come down in there, and maybe there's some bargains out there that you can find, but inflation is still running hot. And us baby boomers, let's talk about us baby boomers. Man, we've had a good life. It's great, but you know what? We did it at the expense of the next generations, right? I mean, you start in 1980 and everything just goes up and up and up and up. Now, why is that? Why is that? Well, because we continue to print money, print more and more money, and the assets keep going up and up. Now, I'm a real estate broker. Most of you know that. When I first started selling houses, I mean, well, let's take the first house I bought. I think I paid $90,000. $90,000. That's pretty fabulous, right? It was I was an old Victorian, right? I mean, I put a wall right down the center of the hallway. I just put up a wall. And I said, it's a duplex. Now, it was zoned R2. So I put a wall in the hallway, long Victorian house, turned the washer and dryer room into a little kitchenette. And you had 2 units in. And I rented them out, and I started collecting rent. And rent was coming in. I was positive cash flowing. And I bought that for $90,000. I was real excited when I sold that. 120, right? I mean, I made 30,000. I'm just a 20-year-old kid. I was incredible amounts of money back then. $30,000 was all the money in the world, best I could tell. Well, anyways, I did it again. Not no dummy, right? I went to the good part of town. I went to Saratoga, California. Saratoga, California, some people will know where that is. It's a very exclusive, rich area, and I put a down payment on a house there. You know how much the house was? $160,000. $160,000. Oh man, that was a lot of money. I was stretched out, but I just said, I'm going to do it. I'm going to do it. I'm going to go live in Saratoga. And I went and I lived there, and I brought over a couple friends, moved them in because I couldn't afford the mortgage just with what I made. So I brought a couple friends to help me out. We were roommates, and it was a great time, fabulous time. They were paying off my mortgage, right? Stayed there about 2 years, went from 160 to 280, 160 to 280 straight up, right? $120,000 profit when I sold that, and they were paying off my mortgage. What a plan that was, right? But the thing is, the houses haven't really gone up over time. It's the dollar has shrunk, right? I mean, when I first sold my house and I got my first commission, I think I made like $1,200. Man, that was great. $1,200. I got paid a commission, $1,200 for selling a house. Wow. Now, I mean, I've had houses that have paid me $120,000 just to sell one house. But back then, $1,200. Today, $120,000. Is it because the houses all went up that much? No, it's because they're printing money. They're killing off the middle class. Middle class is already gone. If you think you're middle class, you're not. You're already gone. If you're rich, you know you're rich because you got more money than you know what to do with. You can't spend it quick enough because the assets keep going higher. Keep going higher. Look at Bitcoin, right? They got that task force. Bitcoin now, it's at 107 or so. It's going to go to 120. You watch it, it'll go up to 120. But hey, there's a rug pull coming. I'm telling you, there's a big rug pull. careful, don't get too excited when it hits 120. Tall Mike warned you, 120 right about there is you're going to see the rug pull and you're going to be back under 100,000 like so quick you won't even believe it. And everybody asks me, Mike, why don't you have all your money in Bitcoin? It only goes up. It's the only asset in the world that never goes down. And they actually believe this. It's kind of a cult following. I got nothing against Bitcoin. Love Bitcoin. I trade Bitcoin. I make a fortune on Bitcoin. Bitcoin's great, but I don't want my money sitting in there. Not when the rug pull, right? The rug pull's coming. They've done it 5 times already where it dropped 80%. Well, if it gets to 120, drops 80%, it'll be down around 30,000. 30,000 is half what Michael Saylor's paid. So he'll have worked his whole life, gone out there and pumped up Bitcoin to lose a whole bunch of money. That'll be a really sad day. People are going to be upset. They tell me that could never happen, but it can happen. What we got out there today, though, is inflation, right? Inflation. And we got an insolvent government. Now, it's not technically insolvent because they can print money, right? They can print money all they want. They can pay the bills. They can get the printing press going. They can make you a trillionaire if they want. They can make me a trillionaire. In Zimbabwe, everybody was a trillionaire. It took $1 trillion to buy a dozen eggs. Now, our eggs are going up. I don't know if you can even find them. We have trouble finding them out here in California. Can't get the eggs, but the prices. Last time I think I paid $1 an egg. $1 for one egg. That's wild. That's wild. It's just funny. But in Zimbabwe, $1 trillion for a dozen eggs. So maybe we're headed the direction of Zimbabwe. Now, of course, they're going to tell you that it's the bird flu, and that's pretty true. I believe that, right? Okay, but we got this inflation going on, and we got an insolvent government, right? And we have liquidity now. Liquidity is actually starting to dry up. You would not know that. Not with the Trump coin, $6 billion, fart coin, $2 billion. You'd think there's still a lot of liquidity out there. But liquidity is actually starting to dry up. It's starting to go away. Banks are starting to restrict loaning, right? You can't get the loans anymore at the banks. Things are starting to tighten up. This is because the recession's coming. The one that we're already in, that the government will figure out a little ways down the road, but we're already in that recession. But you see, here's what's going to happen, right? Here's what's going to happen. You're going to see interest rates on the long end, meaning the 10-year, the 20-year, the 30-year of the bond market. They're going to continue to go higher. Now, how high they will go, I don't know, but how can you tell when they're going to stop going up? It's when everything starts to come down. When everything starts to come down, then they're going to just flood in the money everywhere, and then the interest rate will come down. But you're going to see interest rates on the long end going higher. Now, the long end, of course, is your mortgage rates, right? Mortgage rates above 7% right now, but they could creep up to above 8, above 9, above 10. Depends how long it takes for this thing to break, but it's got to break at least 30, 40% in the stock market and the same in the real estate housing market before rates are going to start to come down. Now, if you're a realtor, you know what to tell the client. Hey, buy the house now because rates are coming down. No, they're not going to come down. Don't be that guy. Don't be that realtor that tells them buy it now. You can't afford it, but don't worry, you'll be able to afford it later when the rates come down. No, you're going to lose the home. A lot of people right now are losing their houses, and it's very sad. If you bought in the last 2 or 3 years, you're struggling, right? Because you were expecting to refinance down at that 3% level. That 3% level's gone. I'm telling you, for mortgages, it's gone. Now, don't get me wrong. On the short end of the curve where the Fed is, they're going to do some emergency rate cuts. You're going to see emergency rate cuts this year of over a point, maybe 1.5 points at a time. They got to get that back to zero, and they want to get it to negative. They can't get it to negative yet because we don't have the CBDC in place yet, but that's coming. They're going to bring that. The CBDC, central bank digital currency, is going to allow them to reduce rates to a negative number, -1%, -2%, maybe up to a -5%. What does that mean for you? That means for you, all your money that's sitting in the bank, if you don't spend it, they're going to steal 5% a year from you. So they're going to force you to spend your money once they get into the CBDC. Now, I hope and pray that we reject it. If you're smart, you'll reject it, but you might not not even know you're using it. How do you know your credit card's not a CBDC? You do not know. They're going to sneak it in on you. And believe me, the public will be begging for it because the recession will be circling the drain. That's just how it's going to play out. Now, granted, I'm Tall Mike. I'm a little bit negative. Everybody knows that who watches my channel. So if you're a positive moon boy, get out there, enjoy the day. But give me the thumbs up first. Punch the subscribe button. We'll talk again real soon. Bye-bye now.